So we do the reporting, because reporting is what goes to the authorities and everybody. So yeah, let's get started on reporting. So what is reporting, sustainability report and disclosure? Organization practices of reporting to all stakeholders. So usually mandatory to government if at all required, but it's also to all stakeholders, because these people are concerned that is your product helping us? Is the product harming us? So yeah. So they try to, like, they want to use electricity, but they don't want to destroy the world. So that's what they are conscious of. Who is supplying the electricity? Is it like renewable or not renewable? So there's huge customers are preferring those who are basically good for them, not bad. It also presents organization value and governance model and demonstrates the link between its strategy and commitment to sustainable development. And we must have known how to report. Okay, let's go here. Oh, maybe I can. Okay. Benefits of reporting for business. A lot of benefits, because obviously you need to report, audit, whatever we call it, so that you know how you're performing. Financial leverage, like if you're making profit, your share values can go up. You can get more investment. You can decide if you're so you can, it helps you streamline your organization, increase access to capital, which I just talked about, reduced financial risk. So if there is good reporting, in fact live reporting we call these days, you can avoid loss right away. Like, in day one, hey, this thing is going sliding towards red, or this is going towards green. So these days we have real-time reporting as well, which has dashboards and other stuff which management can see how things are performing. And it could be done even at individual level. Like even as employee, we can know that whether your productivity is going up, down, are you meeting the targets or not targets. So it's pretty, it depends on what you want. Access to market and increase market share. So you can plan better. So if if things are working, you can plan for the next year ahead. Attracting and retaining talent, because if you're making profit, even candidate do look into your accountings and see. So you might say, hey, we made 10 crore revenue. So did you really make 10 crore revenue? It's very easy to check, because I can check report. Attracting and retaining talent, obtaining social license to operate. It's a kind of social thing, like, if you're doing good, like, if you're buying my tomatoes, you're living healthy, instead of, not only having a bad tomato, but he's also destroying the environment. Demonstrating leadership, improved overall performance. So these are the benefit of reporting. And I'm sure you are studying this more in other subject, but sustainability report is just a subsection of the reporting requirement. And again, so why reporting, and now why reporting on sustainability? Enhanced business value, improved operations, strengthened relationship, enhanced trust and creditability, meet growing expectation of broad range of stakeholders, improved reputation with socially responsible investors, employee recruitment and retention, brand protection and loyalty. And again, as employee recruitment, again, if you know that if I'm working for this company, my health is intact, this company is not destroying my health or the world or the people around it, so they will be more inclined to work towards you, because at the end of the day, health and matters, health and life matters. So you can get more money in another company, but that company might be destroying your environment, your life. So there is quite a bit of sustainability reporting. We cover a bit in metrics. So basically, people earlier used to also report, and environmental agency department was a part of government, agency for a while. No, actually. So environmental reporting started in 1985. 1990, corporate social responsibility started. This was again all those labor and whether you're paying minimum. Triple bottom line reporting started on sometime in between 1990 to 1995. And then, of course, it also led to some standard in reporting as well, connecting reporting and integrated reporting. So the standard development started in 1996, ISO 1401 standard. ISO was the initial standard which is pretty much known in industry before IT came over. 1997, GRI founded. GRI, as you have seen, that is extensively used by many organizations. Almost 70%, basically 70% report on sustainability, good organization. And out of them, 70% use GRI. There's also ISO standards, but probably, as I said, GRI is very aggressive, and they are incorporating other standards if there's a missing component in it towards reporting. And in 2010, IHRC form, you can. So this is the URL you can see, right? You can download it. Basically, you have to copy paste it, not copy paste it, but type it. But unfortunately, yeah. So that's it. Environment auditing, you can do that. So we have already seen GRI is the most important reporting in sustainability, and it's pretty open source. It's available in like 10, 20 languages. So no matter which country you are, which language you are, and plus with translator available these days, you can literally use any language in the world. But obviously, English is the most preferred language across the world, and most of the business still happens in English, apart from few. So yeah, this is the evolution. Like, it was founded by Boston, by UNEP, Gates, and TELUS Institute. To 2001 ever guidelines release, and blah blah, and it has multiple. And by 2016, it kind of standardizes, still evolving, but it's now adding the modules on it, custom industry modules on it. So these are the globally recognized sustainability reporting frameworks. Global Reporting Initiative, which we just talked about. Carbon Disclosure Project, ISO 26000, International Integrated Reporting Framework, IR, Sustainability Accounting Standards Board, SAS, Task Force for Climate-Related Disclosure, TCFD. So, just to recognize, these are the icons associated with these guys. And in India also, they are coming up with reporting. The regulatory nudge to business to be responsible began in 2009 and gained critical mass with the release of NVCs. However, the regulatory push for business to process reporting information came with the Compliance Companies Act 2013, which requires companies to furnish non-financial information mandatory. So, right, so this is the first time it came. The SEBI PBR reporting requirement reduced mandatory sustainability reporting among companies in India in 2012. So it's now becoming kind of compulsory in India, especially for big organizations. So there's another term called business responsibility reporting. So what is that? And its evolution, right? So business responsibility reporting is for disclosing performance of material, social, environmental, and governance. It's not just about thing, but all the three, like, govern and to assist business to perform beyond requirements of regulatory compliance. After revising national voluntary guidelines for social, environmental, and economic responsible business, in new principle called, and so in India it is optional that the companies who are not required to file can also file. And that filing gives you a good thing, because then it becomes, it's a filed report, which means more people can trust it. Like, if you just issue the report, then okay, you might say it's not, I can't find it from the official source, right? Corporate voluntary guidelines was released in 2009. National voluntary guidelines for social, environment, and environmental responsibility for business by MCA in 2011. SEBI mandate top 100 listed companies by market cap to file BRP based on BRP. So now only top 100 was introduced. SEBI extended the BR reporting on top 500 companies by market capitalization. So if you are the top 500 companies, so this has become mandatory. National guidelines for responsible business released BRP report. And again, it gives you access to funding, a lot of funding. Like, India is now going with a great growth phase, and there is huge amount of tax break, as well as compensation, as well as grants on all these. So, and there's a carbon trading scheme, which is also to be detailed soon in India as well. and very likely you can assume that it will be in line with the GRI, like, so so that's one of the things, like, when any reporting, any standards comes up, basically they do take material from each other and try to adjust to their own local requirement. And you can see that documentary, National Guidelines, and this is another link, and you can of course find the latest link, and that will be a task for it. What is the latest requirement on India side? What's mandatory, at least, if not compulsory? And again, as I said, like, everybody's interested in their life and their health. And of course, there's diverse tech stakeholder, investors, suppliers, distributors, media. So investors, government, and consumers. So these are the guys who probably look at your, so business success depends on so many people, right? And again, this helps you manage your expectation, manage. Okay. Yeah, as I said, regulations are increasing. Europe introduced €100 for per ton of CO2. So it's a pretty heavy charge for releasing CO2 in Europe now. You can say pretty heavy because it takes only 10 pound, not even 10 pound actually. Yeah, it's only take 1 pound to compensate for. So they're charging 100 times more if you're destroying the environment. So PAT, there's some of the current thing, PAT for specific energy consumption, financial year 13, financial year 20, RPO increased 17% to 21%, June to 21. So it must be June 2018. Extended producer responsibility mandated under e-waste management rule. And again, you already know there are a lot of environmental regulation already in place, like you can't destroy. So you can pollute the environment, but only to an extent, so you can't really issue deadly, but of course you could release deadly chemicals. That's as long as it doesn't kill, nobody much cares, but you can't, which immediately kills. You can still release gases and waste which kills like in 10 year period, but not immediately. Directive 2005/53 CPCP guidelines for management of EOL of end of life of vehicles, November this. So they're coming up with something so they are, these are the current one, and these are the new thing which are going to come. BS6 norms, April 2020. CSR expenditure mandated for business 2013, as BRSR mandated for top 1,000 companies from financial year 23, and IR encouraged from August 23. So you can see as timeline passes, like it started with 100, now with 500, now 1,000. So it is going up, and it's likely that every organization will be prevented to do harm to their own employees, their consumers, and other stuff. Like, yeah, you are in the business of doing business, but doing business doesn't mean that you could harm willy-nilly other people. Location and existing emerging consumer pricing instrument, and these are like global thing, like science-based targets, Labor Act. So these are some of the international thing, right? Which you can, if you're more interested, like this happening across the world. And of course, what are the drivers? Why are compliance increasing? Of course, human life is very valuable. That's the most, which is not talked across the industry. It's about human life, right? We need an environment, we need good food, we need good air, we need good water. And any of this pollution, apart from global warming, it also causes like flooding, a lot of direct causes of global warming, like heat stroke and other stuff like that. But there's a huge amount of indirect effect, like, which so NGO and non-publics are getting attracted right now. I think it's almost 76% is aware. Let me see the slide. Let's see. I only take a few minutes. If I don't find the slide, I'll probably cover that later sometime. Yeah, probably that's for someday. I've anyway uploaded my, if you people are, so I think around 70-80% of the worldwide people are now aware about uh, uh, climate change things. So this is one of the main thing. Obviously, because people become aware, investors also people, investor and elect employees, customers. Of course, government is also rising, and industry standards have been formed. Government regulations are coming up, and of course, it gives you a lot of benefit. Like it helps you, gives you market asset. As I said, like there are a lot of grants, a lot of tax credit, and a lot of tax saving as well. And like energy bankrupted thousands, if not lakhs of business in European region as in energy prices. So if you are not considerate of other environment, the environment can bite you suddenly, right? You can't just go on forever. Suddenly, if you're using too much energy, yeah, energy prices went up. But if you were generating your own solar energy, nothing could have. In fact, you could have minted more money. You could have become an additional source of income for you. And of course, competition is there, and of course, sustainability increases your profit indefinitely. Like you can continue to reduce your cost to zero, and if you reduce your cost to zero, that means your profit goes up and up and up, and you can reduce your prices and capture more market. So that's the advantage of sustainability. And so not only all these drivers, of course, it increases your profit drastically. Team in national and international development and corporate responsibility field, UN Guiding Principle for Business Human Rights 2011, protect, respect, and remedy. UN Sustainable Goals, Development Goals 2015, Paris Agreement on Climate Change, Core Convention 138, 182 on child labor by International Labour Organization. Even in India, it's illegal to hire people under 14, and I think there is a tight regulations across the world for hiring under 18 as well. Annual Business Responsibility Reports 2012, Companies Act 2013. Target set by India, achieving net zero by 2070, and we are actually doing pretty well in this aspect. Reducing total projected carbon emission by 1 billion tons starting now till 2030. Increasing renewable energy component to 50% of our total energy requirement by 2030. Reducing carbon intensity by 45% by 2030. Increasing non-fossil energy capacity to reach 500 gigawatt by 2030. So some of these targets were set by the government of India, and some of them they have actually managed to meet quite before of them, and that's so India is forefront in the fight towards reporting standards. In renewable and a step forward from BRR to BRSR. Okay, so what I will do is next time I will see what happened. This is a 1-year-old slide, so probably now this is out. So I will cover additional topic just on India factor, because obviously there's a new what do you call budget, and we could have seen some of the improvement and what are the latest thing which has been offered in the budget. So probably we'll cover more on that, just from a specific, because I know all of you guys are from India, and that would be okay. But this is what we noted last year. After the study conducted on sample of top 500 company freelancers, the committee associated with Ministry of Corporate Affairs also begin part of this committee was set up. If this call gets disconnected, do join in like 5 or 10, 5 minutes. Yep, okay. To take a 5-minute break and then join back. Committee proposed was to final reporting format based on NGRBC framework. The committee proposed business standard sustainability reporting. The India we normally call it BRSR instead of business responsible reporting, due to the need to raise above the absence of clarity, completeness, and accuracy of reporting. The committee recommends that BRSR be integrated with MCA 21 portal. This is the portal we use for filing in India. This could ensure that all information already filed on MCA portal by company could automatically be filed while filing for BRSR. Listed entities eligible by market capitalization on other criteria decided by SB could continue to report both on MCA 21 portal and file copies with the stock exchange. A focus on material issue and stakeholder engagement, highly data-driven reporting focusing on global recognized and locally relevant indicators. Reporting format increased from earlier 13 pages to 77 pages. Companies are expected to digitally update the data in the portal MC21. Structure of BRSR framework. The committee proposes two formats for disclosing: comprehensive format and a light version. A comprehensive format, a very detailed questionnaire with expectation of specific answer in textual form, a few distinguished categories under Section C, essential and leadership indicators for companies already experiencing BRR. Light format, fewer numbers of simple questions with yes and no or numerical answers. Two distinguished categories under the section, essential and leadership indicators. Committee recommends that smaller unlisted company below the threshold may begin to, that's said, like, you can voluntarily adopt these guys, and become ahead of the game. So structure of the BRSR. So I'm not covering that other reporting GRI we already covered last time. That's what I was a little confused. Like, hey, maybe I already covered. So we did cover the reporting, the most important reporting, which is GRI, which is used for international thing. So the last metrics lecture has the GRI reporting, and of course the GRI site has all the GRI information as well. So we recommend to download those reporting modules and have a look into like sample reporting and other stuff as well. Structure of BRSR framework. The BSR has three sections and proposed the structure of each of the three sections is given first: general disclosure, management and process, principle, wise, and performance. In general disclosure, we basic information about company with additional disclosure on proximity of company's operation to environmentally sensitive areas. Management and process, disclosing information concerning leadership, governance, and stakeholder engagement pertaining to NCR BRC principle. Section C, principle-wise performance, indication of company's performance on NGRBC's principle and core values is mandatory, essential mandatory for all company leadership voluntary. The questions section C has divided into two categories: essential, those are mandatory for all company leadership, those are voluntary, and which provide an opportunity for company to present their impacts and outcomes. It's expected that the next cycle of review question from leadership target could be moved to essential category, and so companies should see this as a pathway to transitioning to a more comprehensive disclosure regime. So these are being released by MCA, the NCRBCS principle and core elements. Each principle is introduced as a statement and followed by a narration of a essential aspect of the principle, referring to as a brief description. Each principle is accompanied by a set of requirements and actions that are essential to operationalization of principle, referred to as a core elements. The principles are interdependent, interrelated, and non-divisible, and business are urged to address them holistically. The NCRBCs are designed to be used by all business operating or investing in India, including foreign MNC, irrespective of the ownership, size, structure, sector, and location. So the principle and core elements continue. Business should conduct and govern themselves with integrity and in manner that is ethical, transparent, and accountable. Business should provide goods and manners in a manner that is sustainable and safe. Business should respect and promote well-being of all employees, including those in their chain values. Business should respect the interest and be responsive to all stakeholders. Business should respect and promote human rights. These are some of the things we should not have to tell, but unfortunately, businesses don't understand the importance of human life. Business should respect and make effort to protect and restore the environment. Business should, when engaging in influencing public and regulatory process, should do in a manner that is responsible and transparent. Business should promote inclusive growth and equitable development. Getting started on BRSR, prioritize core element, vision, missions, and value. Like and again, this is how we are then. Business success factors, materiality, sustainability issues. We covered what material materiality means. Laws, regulation, global conveyance, and good practices. Map current policies, procedure, guidelines versus prioritize core element, develop new policy where there is a gap in consultative stakeholder, get policy endorsed by government structure, determine performance level for each prioritize core element. Two performance levels suggest by guidelines, essential and leadership. Select indicators of each prioritized core element that reflect in ambition Set target for each indicator and issues. Business benefit for integrating the NCRPCs, right? There's a lot of benefits we already talked about. I will let you guys read through it and okay. So integrity, ethics, transparency, and accountability. So we have done it on like revenue growth and market access, cost savings and productivity, access to capital, risk management, license to operate, human capital, brand value, and reputation. So if you see, what I think sustainability should be followed is because it's positively seen by customers. The customers are getting aware, and if you want sustainable customers, you should be good to your customers. Like they are funding your business. Like kind of even they're buying your product, they are actually helping your business grow. So you should not be harming your customers to make short-term profit. We all know that you can make more profit if you follow sustainability principle, and we are here to help. If any company doesn't know how to make profit following sustainability principle, yeah, we can help. We will help you. Like we have seen so many examples. I've given you like hundreds of example of different companies, how they have done different situations. So there is already a lot of work done on sustainability side, where no matter which business you are, we could make it sustainable, which means that we can make it more profitable. So there's no reason not to harm your, you're basically killing your own consumer, so you're killing your future markets. Right. So revenue growth, new customers, business partner, which we already talked about, access to capital, which we have talked, good governance practice, attractive to investors, because if you're good to customers, that means you're good. Investors will like you, because if the customers are liking you, customers are promoting you, likely you will get more capital, because but again, you will not need even more capital because you're following system. Because if your cost becomes zero, that means you might need some capital, but you may not need that much because your profits are increasing. But yeah, it gives you capital in case you want to grow in new areas and new regions. Risk management, partially seen by communities, by NGOs, local government regulation, human capital, attract, retain quality and employees. So we will get disconnected. So this is the slide for you guys you can take a screenshot and keep reading, but we'll meet in 5 minutes. Okay, once we get disconnected. Principles, safe and sustainable goods and services. So again, revenues, new customers, customer loyalty, obviously enhanced brand value, cost saving, efficiency gains in supply chain and production, lower risk and perception is attractive to investors, reduce